Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Thursday, February 5, 2015, daily chart of the SPY. Let's get right into our blue trend lines here. We don't have to worry about this bottom trend line for now, but let's start discussing the top trend line that I drew in and we took a first peek at, I think either last night or the night before, probably the night before. Anyway, pardon me. So basically, the market draws in this trend line off this pivot top here, this pivot here, these two pivots, and then all of a sudden we came in the day before yesterday into this pivot here, and then we pierced it, and the trend line repelled the market yesterday. But today, we essentially opened above this trend line. See how close we were to it? We opened above the trend line and had a trend up day all day long. And now, remember what I said the other day? I said a lot of times these triangular patterns have a tendency to go in a continuation pattern of where the market was coming from. So we came down from this low here, we went all the way up, then we went sideways, and now we're forming into this triangular pattern. And usually, not all the time, but usually we go up, sideways, and then up again, right? So you could see the market going either breaking out here and then making higher highs, and I'll talk about where we go from here in a second. But if we come back inside this blue line here, back inside this trend line, and we close inside this trend line, then the probabilities go to retesting the bottom of the trend line. And I think the more times we come down to the bottom of this trend line, the higher the probabilities get that we end up down in this area here. So that's one thing to be careful of, and that's a pretty good roadmap to keep an eye on, right? If we close below this trend line, you could say, the market might be teetering on some trouble, and I would kind of be aware of that and be aware with any positions I have to make sure I have stops on them, or if you even wanted to play the other side, the more riskier players would play the other side, that we would go down to the bottom, if not below this trend line. But what we could do from here is, let's go to the upside now. What we could do is, or what we should do is, we should, remember I said, the first level of resistance would be these two tops here, and that's exactly where we came today for the most part. We came to these two tops. The next level, and this isn't rocket science, folks, right? The next level is this pivot high here, where the high was 206.88. Now, that's close enough to 207, so you would think, because it's one of those round number psychological levels, you would think that the next level we're going to attempt is 207, and we'll probably get a pierce through 207. So you would look for somewhere in the neighborhood of 207 to 207 and a quarter for the next level higher from here as a stopping point. Could that happen tomorrow? Sure, it could. Why? Well, tomorrow we have the all-important non-farm payroll number coming out at 8:30 a.m. Now, anybody that knows anybody knows that the number is phony, but it's a made-up number or manipulated number. They make the formula what they want the number to be. Who knows? I mean, there's no way in hell, I shouldn't say that, there's no way in heck that anybody really knows what the number is. There's no way to know what the unemployment number is, the amount of people that are out of work, that just got out of work, people that just started working again. They always have this number of people that stopped looking for work. Well, where do you come up with that? How do you know who stopped looking for work? It's just not feasible. So all these numbers are just government made-up numbers. However they want to make them up, it doesn't matter. All right, I'm off the soapbox. The point is that the market reacts to whatever the number is. That's what we're interested in. We don't care what the number is. We care what the market does following the number. And Just like the Fed, when they come out with their announcements, the number will come out and the market will either gyrate around, and this will all happen at 8:30 in the morning, and then all of a sudden it'll pick a direction, and that'll be the direction of the day. And since it's Friday, we rarely get big sell-offs on Friday, and the market is in float mode right now. So I have to believe that the market's going to attempt and hopefully achieve the 207 plus area tomorrow, and then we would look for light volume the remainder of the day. Half the day on Friday will be kind of a float around. Maybe you get a buy program into the close. That's a typical Friday, but we'll see. Anything goes. Maybe the number's not bullish. Maybe the number is perceived bearish, and we come down and we retest this trend line tomorrow. That's certainly a possibility if the number is perceived negative. Now, perceived is one thing, right? But we'll see. I've got a target here. I think we're going to get up into this pivot top here, and we'll have to play it one day at a time. Now, if we do get up into that pivot top, what happens from there? Well, I think the market does stall out, and if we get into that pivot top, I would have to believe that the market would either pull back next week or at least go sideways for a few days, because we will have put in a daily top if we get to this number tomorrow. If we get up into the 207, 207 and a quarter area tomorrow, okay, we will have put in another daily top, and we should see some kind of pause out of that. I don't know how much selling pressure we'll get out of that. We'll kind of get more into that tomorrow. We'll see what happens. We'll see what the market does tomorrow, and then we'll just interpret whatever the market is telling us it's going to do, and we'll just take the best probabilities out of what we see. All right, let's go on to oil. Another wild day. I'm bringing up the USO, but another wild day for oil today. It was up again. Yesterday we were down off the daily top, and then today we were up again, but we didn't make new highs. I still think there's more downside to be had in oil, and this is really a play off the dollar. The dollar's been struggling a little bit, and with the dollar struggling, and remember, I told you the dollar was going to sell off. I told you that late last week, and the dollar sold off this week. And the dollar currently is at about 93.67. Our low was 93.40 something, I believe, or 38 maybe. And I said 93 and a quarter to 93 was going to be the low. That's pretty close. I don't know how much lower we go from here. We may see a bounce in the dollar, and if we do, then oil will struggle once again. And being that oil put in a daily top, we really should see another couple of days of downward pressure in oil. At least that's my take on things. But we'll see. And if oil goes sideways to slightly lower for a couple of days, we could see higher prices once again in oil, because we can certainly, if just talking about the USO, we can certainly get to this 21.5 level in the USO where there's a lot of resistance here, but we should get to this 50-period moving average, maybe pierce through it a little bit. 21.25, 21.50 would be a good target on the USO. But first, I think we have a little more downside pressure in the price of crude oil. We'll see how that plays out. It's a little bit whippy. It's really been certainly a trading vehicle, if nothing else, over the last 4 or 5 trading sessions. So we'll have to see how that plays out. I have nothing definitive. This is just what the probabilities are telling me is ahead for the price of crude oil. Let's go over to gold, and there's much of the same kind of picture in gold. We don't really have a direction right now, and as long as gold stays above 1250, 859 on a closing basis, we're going to stay above this 200-period moving average. That's right around the same area. We're going to stay above this area, and there could be higher prices ahead. But if we did close below that area, then we'll come down and fill this gap here, and that may present another buying opportunity. Right now, there's no play in gold. It's kind of in no man's land. I don't have a definitive direction. In fact, I would like to see more downside. I'd like to see this gap filled, because I think that would be a buy area. But right now, there's nothing going on in the price of gold, nothing definitive that it tells me there's enough of a probability to take a directional trade one way or the other. So sometimes the best trade is a no trade. I do want to talk about one other thing tonight. I normally don't do this, but I'm going to. The members got a trade alert about a week or so ago in Nucor. And I just want to explain the trade. Now, the trade was taken down in this area here at about 44.30, 44.50, depending on where members got into the trade. Now, I want to give the reasons why the trade occurred. One is, and the simple one is, Nucor is a steel manufacturer, okay? So steel is a commodity, just like oil is a commodity. Now, I believed that the price of the dollar was going to come under pressure and go lower, okay? So that is one tick in my favor in picking a commodity to trade on the upside, knowing, man, I told you oil was going to pop, and I also told you the dollar was going to pull back, so I'm looking for trades, and I see steel was really beaten down. Now, I'm going to go to the longer-term picture here for a second. This is the weekly chart, all right? Now, the weekly chart, Nucor had come into this 200-period moving average, and the last time it even touched the 200-period moving average was in April of 2013. So I felt that even though we came through the 200-period moving average, okay, I felt that the 200-period moving average would ultimately be defended, and we were popped back above the 200-period moving average. Now, we made a weekly low here on some heavy volume, and we put in what could be considered a bottoming. It's not really a bottoming tail, but on heavy volume, it looked pretty good. I thought we would recapture the 200-period moving average. I thought that the dollar would finally, at least short-term, top out and pull back. Steel is a commodity. Steel should rise on a falling dollar. And this chart, this 200-period moving average, looked like good support to me. And if I go over to the monthly chart, okay, we'll see here that there's a lot of support in here, okay, in this area here. The market was defended here. The market chopped around in this area for quite a while, several months, about a year in this area, back and forth. So I knew that the mid-40s was a good level of support. And if I go over to the daily chart, okay, and we came down here and we looked like we were starting to carve out a low, okay, and figuring that the seasonality was kicking in, that the market hit a weekly bottom, right? Remember, let's go back to the SPY for a second. You know, this is like a big puzzle that gets put together, okay? Remember, I said a weekly bottom was here, which means that we're going to see higher prices for a few weeks in the S&P. Okay, even though we came down here, we bounced off this trend line, and now we're starting to see higher prices again. So all those things culminated. The pieces of the puzzle got put together, and I decided to put the trade alert out to members. So I just thought that was worth going over. Obviously, now you see why I showed it to you, because the Nucor trade is working out, and it's working out for all those reasons. Anyway, hopefully this has all been helpful. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.